everyone. Welcome to our look at the upcoming week of June 1st. And in front of you, I have the economic calendar, as you can see. June 1st is a pretty quiet session. We've got PCE out of the United States, which, of course, could have an influence on stock markets in America. ISM manufacturing PMI, of course, could have an influence on U.S. stock as well. Beyond that, not much. We have the RBA interest rate decision on Tuesday, obviously an Aussie mover. Really, as we go through Tuesday, we have unemployment out of Germany. That, of course, is pretty significant. PMI construction out of the UK will move the FTSE and the pound. And really after that, we have PPI and CPI out of Europe. Probably won't move the markets much, though. Really, at this point in time, that's not what traders are focusing on. We have very little until the Wednesday session where we have China Services PMI. This is a little bit of a tricky one because it tends to affect all stock markets around the world. If it's a really bad number, for example, it spooks the stock markets. ADP employment change on Wednesday, which is the precursor to the employment number on Friday, of course. ISM non-manufacturing PMI on Wednesday as well could move the markets. Crude oil stocks change, of course, is a crude oil specific number. And the Fed Beige Book just kind of gives you an idea of how the Fed feels about the economy. Probably not a lot in that this time. Then we go into the Thursday session. Bank of England has an interest rate decision. Asset purchase facility. This will probably be what people pay attention to more than anything else as to whether or not they continue to liquefy the markets out of London. And as we get later in the week, we've got Ivy out of Canada. That can be a mover. Really, probably not going to be a big deal. And then, of course, Friday, it all comes down to unemployment numbers out of the United States. Pretty much everything else takes a back seat. So with that, let's take a look at some charts. It appears that the euro is trying to break out above the 110 level. Those numbers out of Germany could be the reason for them to do so, or if something comes out of the Fed or a jobs number is fairly bad. There are plenty of reasons why we could go higher. If we can significantly break above the 110 level, we feel this market probably tries to reach to 112 and then 114. Below the bottom of the hammer on the 108 level, we think the market breaks back down. The FTSE continued to chop around, and we don't see anything different coming. And in fact, what we're actually waiting for are short-term pullbacks to buy calls. We believe there's a ton of support at 69 and 68. No interest in buying puts. You can see the gold markets drifted a bit lower during the course of the week as we continue to just meander in this area. We are willing to buy calls a little closer to the 1160 level if we get down there. In the meantime, though, expect a lot of sideways action. And with that, we've taken a look at the upcoming June 1st trading week.